you really want to um, basically have a mortgage, deed of trust. Every state's got sometimes different language and instruments that they use, but that deed of trust is securing your debt with that collateral. And there's a specific way that you attach collateral to loans, and so you got to sort of use some magic language and jump through some hoops. But typically, the way you secure real estate as collateral is by filing a mortgage or deed of trust document in the county in which the property sits. And then those three documents, the promissory note with the personal guarantee with the additional collateral from the real estate, that puts the private money lender in much better stead. And outlines, exactly what your recourse is, and if for some reason there is a default or delinquency, you can always uh, go against a borrower personally through the personal guarantee,
Sure.
or with respect to foreclosure on the property.
Gotcha. And would you recommend to a client to get like lender's insurance on that as well?
Yeah, sure. And we don't do a ton of that. There's there's title policies
Yeah.
that include the lender, and so if you're doing like acquisitive transaction where a title policy is going to be issued, a lender's policy makes some sense, because if there's a title issue, like if you're lending, $400,000 and the property is worth $500,000, well, if there's a title issue that substantially um, reduces the value of that property because of that title issue, you can also be, as the lender, one of the insureds, and potentially get a payout of a claim, because instead of the property thinking, believing the property was worth 500, it's now only worth 350,000, and that changes things from a risk exposure perspective.